Last day of the week, and silver just got obliterated. Silver crashed from $121 to $95. That's $26 gone in hours. Gold dropped from $5,600 to $4,950. That's $650 erased. Now listen to me carefully. If you're watching this and panicking, stop, breathe. Do not touch anything yet, because what I'm about to show you does not add up. The numbers don't make sense. The story the market is telling you is not the real story. Silver fell 22% this week, one of the largest weekly crashes in years. And yet, right now, you cannot buy physical silver. Let me say that again. The price is crashing, but the product is disappearing. The Perth Mint in Australia has suspended sales. The United States Mint has suspended sales. The Royal Mint in the UK is out of stock. Dealers in India are defaulting on deliveries. Costco has purchase limits on silver. Does that sound like a real market to you? Because in a real market, when price crashes, supply shows up. Sellers come out. Inventory becomes available. That is how markets are supposed to work. But that is not what's happening here. Here, the price is collapsing while supply vanishes. Price down, metal gone, something is very wrong. And by the end of this video, you'll understand exactly what it is. Welcome to the hidden economy. If you're new here, this channel exists to expose what's actually happening in markets while everyone else is hypnotized by headlines. Subscribe, because you will not get this analysis anywhere else. Now let me tell you why this crash is not what it looks like. A few days ago, I warned you. I said $117 was a critical level for silver. I showed you a 30-year historical pattern. I said a sharp correction was likely. At the time, everyone was euphoric. Now here we are. Silver fell from $121 to $95. But here's what shocked me. I did not expect the physical market to break at the same time. I did not expect mints to shut down globally. I did not expect a complete severing of paper and physical, but that's exactly what happened. And if you don't understand this, you are going to make a terrible mistake. So let's get something straight. There are two silver markets, not one, two. And right now, they are telling completely different stories. The first is the paper market. This is COMEX, futures, derivatives, ETFs. This is where banks, hedge funds, and institutions trade billions of dollars of silver every day. But they are not trading silver. They are trading contracts, promises, paper claims. Most of these contracts are never delivered. They're just bets. It's a casino. Money changes hands. Silver does not. The second market is the physical market. Real silver, bars, coins, metal you can hold. This is the silver that exists in the real world. These two markets are supposed to be connected. The paper price is supposed to reflect physical reality. Right now, that connection is broken. The paper market says silver is $95. The physical market says you can't have any. One of those is lying. Do you trust the screen or the empty shelves? Let's talk evidence. The Perth Mint, one of the most respected mints on Earth, over a century of production, trusted by governments, institutions, and investors. On Thursday morning, before the crash, when silver was still near 117, they sent a notice to wholesalers. Here's what it said. Due to increasing worldwide demand for silver bullion products, they have a large backlog of orders for the 2026 Kangaroo 1-ounce silver coin. They are pausing wholesale orders until February 23rd to clear back orders. They are implementing monthly allocations to ensure regions receive stock. Read that slowly. Increasing demand, backlog, pause orders, monthly allocations. That's rationing. This was not after the crash. This was before it. Australia is one of the world's largest silver producers, and its own mint can't keep up. Then the price crashed. Silver dropped to 95. Now think, if the Perth Mint was already overwhelmed at 117, what do you think happened at 95? A 22% discount just appeared on something that already didn't exist. Demand didn't fall. Demand exploded. Now the United States Mint. They suspended all silver numismatic sales. Official explanation? Updating prices. Reality? Silver moved too fast. They were selling eagles at $91 when spot went over 90. They were losing money, so they shut it down. When sales resumed, the price jumped to $169. That's an 86% increase overnight. The 2026 Silver Eagle release has been delayed to late February. Subscriptions are already sold out. This is the US government telling you we don't have the silver and we can't sell it at those prices. Now India, one of the largest silver markets on the planet. Dealers are not just low on inventory, they are defaulting. People are paying and not receiving silver. Amazon India orders canceled after payment. Dealers failing deliveries. This is no longer a supply issue. This is a delivery breakdown. Now the Royal Mint in the UK, one of the oldest mints in the world, out of stock. Even 1 kilogram bars, gone. When Perth, the US, and the Royal Mint all break at once, that is not coincidence. That is a systemic failure. And then there's Costco. Yes, Costco. They now have purchase limits on silver. A retailer famous for bulk buying is rationing silver. Why? Because demand is overwhelming supply. Now listen carefully, because this is the part that should genuinely alarm you. China. Shanghai Futures Exchange data from today. Their silver vaults hold 455 metric tons. That's 14.6 million ounces. Sounds big? It's nothing. In one single day, 26.94 metric tons were withdrawn. Almost 27 tons in 24 hours. That's roughly 870,000 ounces gone in one day. At that pace, Shanghai's vaults could be empty in less than 3 weeks. Global annual silver demand is over 1 billion ounces. Shanghai holds barely 1% of that. China has already restricted silver exports. They've classified silver as a strategic asset. No silver leaves, and they are draining their own vaults. Paper crashes in the West. Physical disappears in the East. Now look at the selling. Nearly all of it happens during US market hours. Not Asia, not Europe. New York opens, silver dumps. New York closes, silver stabilizes. Every day, same pattern. The US sells paper. Asia and the Middle East buy metal. Banks sell what they don't have. Asia loads trucks. One side is playing a video game. The other side is taking the prize home. Lease rates tell the truth. Normally near zero. Now reported between 8% and 39%. 39% to borrow silver. That's panic. That means there is no metal. Now connect the dots. Paper price says 95. Physical market says nothing available. One of these must break. Either paper reprices upward or physical supply collapses entirely. Now listen to me. If you hold physical silver, do not panic. You are holding what the entire world is scrambling for. The paper price is noise. Your metal is worth what someone will actually pay, and that is not 95. If you hold paper silver, ask yourself one question. If everyone asked for delivery tomorrow, could they deliver? No. There isn't enough metal. You don't own silver. You own a promise. And promises break. 5 years of deficits. Over 800 million ounces cumulative shortfall. Stockpiles drained. Buffers gone. This is structural. This is not a bad week. This is the end game of years of imbalance. The lower paper price goes, the faster physical disappears. That's the paradox. And here's the final truth. The price crashed. The metal vanished. One of those is lying, and it's not the empty vaults. This isn't a market. It's a magic trick. And now you know how the trick works. Subscribe, hit the bell. I'll see you in the next one.